a look at all things money matters now. The JSE is weaker as concerns about tightening U.S. Federal Reserve policy weighed on sentiment. The JSE all-share was on track to extend Friday's losses as market prices in the prospect of a U.S. interest rate increased as soon as March. Petri Redelinghuys is the trader and founder of Herenya Capital Advisors. He joins us now to take a look at the latest moves. A happy Monday to you. Are we seeing that where the markets are concerned?
Not a very happy Monday on this side, I'm going to be honest with you. We saw, I don't know how to explain, a little bit of risk off, I guess, coming into markets last week. That theme playing out again today, continuing. So we had markets sell off actually relatively badly in the US. Contextually though, we are still very close to all-time highs. The market sometimes gets a bit extreme. If you look at sort of sentiment and that kind of stuff now, market is extremely bearish. And sometimes the market pushes that a little too far. But nonetheless, I mean, markets are not looking good today, globally as well as locally. The US, futures are down almost 2%. In Europe, markets are trading down in excess of 1%. Locally as well, the top 40 index down around 1.7% at this stage. Most indices really, most sectors within the market really feeling the pain as well. So there's really nowhere to hide. Markets are generally just coming off and taking a bit of a breather. Keeping in mind that I think 2 or 3 trading days ago we ended at an all-time record high. If the market comes off 2 to 5% from the highs, it's not necessarily the end of the world. Markets don't move in straight lines, but it is definitely, it feels like there's quite a bit of fear out there today.
Any joy on the commodity side?
On the commodity side, yes, I guess. I mean, the gold price is looking pretty good. That's trading up around 1/3%, and I think that this is as people are searching for safety. This inflation narrative is something that's really going to probably continue to be a very strong talking point over the next year or two. And people are trying to position their portfolios into what's essentially being, it's been a very challenging market over the last 2 years. Finding out exactly, or trying to figure out exactly how to position yourself in a very unpredictable environment is sometimes difficult, and the market isn't getting any easier, right? We're now entering into a stage where, yes, there are signs that inflation to some degree is transitory, and inflation will start to come down as time goes by, as supply chains and all that type of stuff ease up and bottlenecks in supply chains ease up. However, we might see some disinflation in other things, right? So we've had a huge amount of inflation in products and goods, right? That might now change into disinflation in that, or prices coming down for products. You look at second-hand cars, that kind of stuff, while the prices of services are, set to go up. And that's basically a change in people's spending behavior more than it is really, it's a combination of things. It's spending behavior, due to lockdowns, we couldn't leave the home, for example, so we spent our money on things rather than experiences. We might see a reversal of that now as people are once again allowed to leave home, and we see the world sort of slowly coming out of lockdown piece by piece. So that is something that I think is going to be relatively challenging to navigate, and I think the market is trying to digest, well, how do we position for that? Are the growth stocks still the way to go? We've seen tech companies and the lockdown stocks, as you want to call them, really do incredibly well. However, a lot of those stocks are now 30 to 40% of the highs. The question is, do we rotate into value from here? If that's the case, countries like South Africa offer a huge amount of value. We can see that by international firms coming into South Africa and buying out listed companies, sort of at a whole. It's happened quite a few times now over the last year. We'll probably continue to see that, and I think that that the debate is now really around, do we position for value? And if that's the case, do we continue to see economic expansion? Does that continue to push commodity prices? So do countries like South Africa benefit greatly from that? Or do we see, the madness of markets return, all the dip buyers just step in and buy the tech stocks and, more of the same as what we've seen over the last 2 years? So it's a very difficult very difficult time, I guess, in markets. And, I think the market is just sort of coming to grips with exactly where, it believes it's going to go. And there's quite a bit of data coming out as well. Obviously the Fed employment numbers, that kind of stuff is really going to be the driving force here. Generally in commodities, so, there's a little bit of fear around what we're going to do. So we're seeing gold price quite well bid. So that's up around 0.4% at $1,839.25 a fine ounce. energy prices coming off a little bit. We did actually start the day positive on oil price, but we're now down around 0.5%, so that's putting a little bit of pressure on the likes of Sasol as well. And then actually, believe it or not, the Rand, well, actually, no, I eat my words. The Rand weakening a little bit. We saw the Rand strengthening a huge amount over the last 2 weeks. That's giving up some gains, and I think that's, as the market kind of figured out where the source of the strength was coming from, that's starting to reverse now a little bit.
Help us digest this. So after years of litigation, Steinhoff settlement has been approved by the Western Cape High Court. The retailer will be paying about 25 billion Rand.
Yeah, so there was well, obviously, I think we're all very familiar with the Steinhoff story at this stage. There was a class action lawsuit where a lot of the shareholders who had lost huge amounts of investment basically sued the company trying to get their money back. That lawsuit has now been sort of settled, and Steinhoff is due to pay 25 billion Rand to affected shareholders. So these are pension funds, private individuals, for example. It's quite a landmark case, actually. So it's interesting to see that, one, that is sort of being enforced, and two, it provides a little bit of hope for the Steinhoff shareholder. There's a couple of things that, for the company itself is necessary for it to survive. And I think that this is a step in the right direction, right? We're starting to see that there is some accountability being taken and there is some recourse for shareholders that were negatively affected. So I think that's a very sort of positive sign. There are still a few steps to restructuring this business to ensure that it is successful in future. But it is definitely a step in the right direction, and I think there's going to be a lot of relieved shareholders out there over the next couple of days.
Savannah Stillwater has canned a $1 billion deal to acquire 2 Brazilian mines. What do we know about that?
So they actually announced it, I think, last year, 26th of October. They announced it initially. When they announced it, the market didn't like the idea so very much. But basically, they're wanting to go into sort of the copper and nickel mining business, if you will, and they were looking at buying these mines in Brazil, specifically for those 2 commodities. They have decided to can that idea for a couple of reasons. I guess one, stick to what you know. It may not necessarily be the best of deals. We've seen Neil Froneman, CEO of Savannah, being very tactical in the acquisitions that he's done. Sometimes, he's gone from being an absolute villain to being an absolute hero, depending on the most recent deal that he's done. So, but thus far, actually, the track record of the transactions that he has done with the company has been very successful. So it's interesting to see him walking away from this one, right? To see the company sort of say, no, thank you, not for us. They announced the deal. They've now sort of recalled, they're no longer going to be doing it. So there's a couple of things that I think happens here. One, we probably can see that they've now got an extra $1 billion, dollars that they sort of earmarked on spending on something that they're now not going to spend. Does that mean that they're going to pay that out as a dividend? Do we get a bigger distribution? Results are due on the 17th of February. So I think that we'd probably see a slightly higher dividend. So this is, as that capital is returned to shareholders. And I think that maybe, we're seeing a company that's being a lot more tactical around how they deploy their capital, right? Play to what your strengths are. Yes, things like copper and nickel are going to continue to be important, particularly in, battery technology and that type of stuff. And that is something that is going to only get bigger over the next, 10 to 20 years. But is that potentially the best use of the capital? Savannah says no, right? And that is potentially good news for us as shareholders, as we could get slightly higher dividends come February, which could be a positive surprise.
Petri Redelinghuys is the founder of Herenya Capital. Thank you.